Hey guys, Tiffany Devonshire, broker for Rock Blue Homes. We also have Rock Blue Management and Rock Blue Contracting. These are divisions and businesses and companies and tools for our investor clients. So wanted to just quickly talk about the residential real estate market quickly. We are advising our clients to steer away from residential flips at this time, only because the buyer's market, right? So the pool of buyers has shrunk considerably compared to, if you look at, in COVID, people were buying and buying and buying. It was a seller's market. So sellers would put a property on the market and then they would get 20 offers, over asking, waiving appraisals, like, we just want the house. We don't care about anything else. We want the house. Sellers had a great run in COVID, and then it was over and it shifted a little bit to a buyer's market. We were not getting as many offers. We were not getting over asking. Now buyers want inspections, home inspections, which they should get all the time anyway, by the way, so that they know what they're buying. But anyway, then the interest rates started to increase on purchase loan mortgages. So that took the buyer pool even to a smaller level, because a lot of people that had been shopping but didn't have a rate lock, meaning they didn't have a house, they didn't lock it in, their interest rate increase basically gave them less purchase power. So if they had been looking at properties in the $400,000 range, and now their loan officer calls and says, listen, with this interest rate, you guys are really only eligible for $350,000 now. Well, $350,000 compared to $400,000 when you're talking about a house is a lot. There is a lot that you're not going to get. And so buyers are disenchanted. They want to take a break. They want to sit on the sidelines. Then you have the other buyers that got knocked out. Like, okay, with this interest rate increase, you really don't qualify for anything that will be, put you into a property you want. Also, there's a stereotype or idea that, mortgages are overpriced right now. So a lot of people are really erroneously, in my opinion, sitting on the sidelines saying, well, we're going to wait for the interest rates to go back down. Yeah, if you're thinking that, there's a whole bunch of people thinking that. And so we're going to shift right back into a seller's market. But this is what I want to talk about. I want to talk about, and again, I'm not a mortgage professional. You really need to consult with a mortgage professional. We have some people we refer to. So if you want, a good lender, we can definitely refer you to a couple. Feel free to reach out to us. But, the fact that the mortgage rates are high now, higher than they were all through COVID, there have been periods of interest rates much, much higher than this. In the 80s, literally mortgage loans were like 12, 15, 18%. And so what happened? As soon as the economy shifted again and interest rates decreased, people refinanced out of those mortgages. So that's eventually what's going to happen here. Anybody that's buying right now at interest rates that are high, in their opinion, in 2 to 3 to 4 years or less, they're going to refinance out of that. So what you really have to do is ask yourself, the extra money that you're paying in interest for 1 year, 2 years, 3 years, however long it takes you to refinance, is that more or less than what you're going to throw away in rent for that amount of time, right? So, I don't think the residential buyer's market is actually really reflecting what the economy should be doing, but we all know that people are not rational. People are not reasonable when you're trying to analyze something so complex, right? It's like, hey, the interest rates are high, but you're not really considering all the factors that I just laid out. So I guess the long and short of it is, we are still advising our flippers, our investors, to hold off on the flips for residential purchase, unless it is a deal that is just a home run, knock it out of the park. Absolutely, a flip still makes sense. But currently, we are recommending our investors to do rental grade flips or to do buy and holds. And so that's our recommendation for our investors. For our residential buyers, guys, get off the sidelines, because if you want to make a change, if you want another house, whether it's because of the location, whether you want to be closer to family, further from family, more room for the kids, downsizing, less room because the kids are gone. Whatever it is, don't be afraid to pull the trigger if it is going to make your life better. Life is literally too short to worry so much about something that you can remedy on the back end when the interest rates do go down. So analyze it, do what makes sense for you and your family all the time, not just with regard to real estate, but all the time. So thanks for listening to me, guys, and I hope that everyone gets to achieve their goals in 2023.